Hi everyone and welcome to the Franchising Matters video series. My name is Steve Bjors and I'm CEO of Reshift Media. Today we're going to be talking about franchise development lead generation and some trends that we're seeing for 2025. Just before we jump in, I thought I'd tell some of you who are new to the channel who Reshift is. So we're a digital marketing organization and we specialize in helping franchise organizations with all things digital media. That includes social media, search, website development, influencer marketing, basically any digital marketing you can think of. We're also the inventors and owners of the Franify platform, which is the world's most popular franchise development digital marketing platform, basically designed to help franchise organizations get the best franchisees for their organization. We've also been named the world's best franchise marketing company by the Global Franchise Awards for 3 years in a row. We were named top franchise supplier by Entrepreneur magazine, and we were named Disruptor of the Year by the International Business Awards. Enough about us, let's jump into the presentation. So one of the things we like to look at when we're trying to get a handle on how things are going in the economy from a franchise development perspective is we look at search volume. So this is data directly from Google Trends. And we've taken a cross-section of terms here. So this is terms like best franchise to own a franchise, franchise opportunities. We have a few dozen different terms in here. What we do is we index them to 100. So the idea here isn't to look at the discrete value of each point, but rather the trend over time. And what we're using here is Google searches as a proxy for people being interested in franchising. So this trend here happens to go all the way back to 2022. And as you can see, at the start of 2022, we were trucking along. It was a very good Q1 from a interest in franchise development. We saw a prolonged decrease through the back half of 2022 and into 2023. 2023 was pretty steady from a search volume perspective around franchising, a major decrease into the summer of 2024, and then a little rebound going into the fall. So that decrease in the summer, by the way, isn't unusual. We do tend to find that in the summer months, people are a little busier, they're outside more, they aren't necessarily looking to make a major life change. So we do find that overall volume and interest in franchise development does in fact go down a little bit. Having said that, 2024 was a more pronounced decrease than we typically see, but we were very happy to see that bounce back near the tail end of 2024. Now the real story is what we've seen in Q1 of 2025. So we've seen a massive increase in the number of searches for, again, terms like best franchise to own a franchise, restaurant franchise, buy a franchise. Again, it's several dozen different terms, but the volume overall is quite up. In fact, if we look at our trending year over year, from Q1 2022 to 2023, we saw a decrease of about 10% in the search volume. From Q1 of 2023 to Q1 of 2024, we were about flat at +1. And then from that same period of 2024 to 2025, we've seen an increase of 12%. So I will say this is the largest increase we've seen in some time. And the overall level is much higher than we've seen in a few years. So it's a very positive trend. We were anticipating this. The economic fundamentals look very sound. So those of you who follow the channel, you would have seen a few months ago, we at Reshift were absolutely expecting 2025 to get off to a very good start from a franchise development perspective, and it absolutely has. Now, you're probably wondering, well, what's the driving factor behind this? Why are we seeing these peaks and valleys? Well, we plotted the trends against changes in interest rates by the Fed. So these red lines are every time the Fed increased interest rates. You may recall in 2022 and early 2023, there was a prolonged period where the Fed was increasing interest rates every couple of months. And as you can see, that corresponds with the period where we saw a huge decrease in interest. So this doesn't necessarily mean that interest rates going up leads to less interest in franchising, but they are certainly correlated. And the reason for that is clear. Interest rates are a good indicator of underlying economic health. And in a period where the Fed feels they need to be raising interest rates, it's because inflation's too high and because the economy isn't performing the way they want. And yes, of course, as we all know, when someone's looking to buy a franchise, they often finance it at least partially with debt. So there is a direct impact as well. If interest rates are going up, people don't necessarily want to get that more expensive debt. So there's a correlation and a bit of causation, I would argue there. Now, if you look at a more recent period, through the fall, the Fed was actually decreasing interest rates. That's what each of these green lines are. That's every time the Fed announced a decrease to the interest rate. And not surprisingly, that made people feel pretty good about the economy. Going into Q1, we saw a lot more enthusiasm for franchising. So the good news is economic fundamentals seem sound. People are excited about franchising, and the data from Google certainly proves that out. So our expectations for 2025 are that the economic fundamentals look favorable. However, we do need to flag that there are some geopolitical and financial market instabilities that certainly could have a detrimental impact. As the stock market is going up and down, we've seen some big fluctuations. And if there is ongoing uncertainty in terms of international trade, we could potentially see some impacts domestically. Now, having said that, if that kind of settles itself out, as we are starting to see, this video is being made in May, and things seem to already be smoothing out a little bit. Assuming there aren't any big shocks to the financial or international trade systems, we do expect 2025 will be a very strong year for franchise development. Online competition for franchisee leads will absolutely be high. We've seen lots of organizations entering the market. We've seen strong demand for to try and get new franchisees as franchise systems are trying to grow. So we do expect that cost per lead to be growing throughout the year, which is quite typical. That's not surprising. It's just that you need to be cognizant of the level of competition in your particular industry, and you'll see if those that cost per lead has upward mobility. Now, in terms of what you can be doing to decrease that cost per lead and compete in what is a very competitive marketplace, we do have a few thoughts for you. So the first thing you need to realize is that franchisees have gone digital. So the days of a franchisee needing to rely on your organization to get information, or franchise brokers or anyone else, is kind of gone. They are doing their research online. By the time they reach out to you, they already have a good handle on who you are and what you do. They've probably researched your competitors. They've probably researched your industry. So that purchase journey they're on is now largely self-managed because the internet has just given them so much information that they are self-sufficient in that regard. So because of that, you as a franchisor need to be active at all levels of the purchase funnel to be effective. What I mean by that is, when someone's thinking about buying anything, never mind a franchise, they tend to move from the top of a purchase funnel to the bottom. At the top is general awareness. I'm perhaps interested in franchising. I don't know much about it. I'm not sure what sector I want to be in. They start to understand. As they move more towards the middle of the funnel, they start to hone in maybe on specific sectors they're interested in or specific brands they might be interested in. By the time they get to the bottom of the purchase funnel, they've already settled on, this is a sector and here's the 3 brands I'm going to contact. So you need to just be cognizant that people are active at all levels of the purchase funnel, and therefore you need to be active at all levels of the purchase funnel. And what we talk about is the outbound and the inbound marketing tactics. So outbound is where you're going out and you're trying to raise awareness. Inbound is where you're trying to get someone to come to you because they've already expressed interest in franchising. So let's talk about that. The place where we recommend people start with is search. So search is right at the bottom of the funnel. And we love search because basically what it is someone is explicitly telling you that they are interested in franchising. So when they conduct a search, you can be pretty sure that they're interested in learning more about a franchise. They've probably done the research. They're probably close to making a decision. So these tend to be incredibly high quality leads. And the first place you want to start with is optimizing your website for organic searches. So organic searches, meaning someone's gone to Google or Bing, they've searched for a franchise opportunity or buy the best franchise or maybe even your brand. They've gone to the organic results on Google. They've clicked that and they've come to your website. That is the best lead you're going to get. Those are typically very qualified, and that person is very close to making a decision. Top performing franchise websites that we work on can get 3 to 5 leads a day organically. The beauty is the incremental cost for every lead is in fact zero. You have to do an investment up front and you have to invest in content, but each lead itself doesn't cost you a thing. One thing I will give you as a big tip is don't structure your franchise website as its own URL. So as an example, my website is reshiftmedia.com. I don't want to set it up as reshiftmediafranchise.com. That's a whole different site, indexes differently in Google's eyes. What I really want is I want reshiftmedia.com/franchise or franchising. I want to incorporate that franchise site in my main website. Really helps from SEO perspective. Also helps from a credibility point of view, because then that person coming in knows exactly that franchise microsite or web page is part of the main site. And a key thing here too is don't expect you can just throw up one web page about franchising and suddenly leads are going to start rolling in. You need to have multiple pages talking about your franchise and why it's a good idea. Think about creating articles ongoing that talk about franchising in general, your industry, why your industry is a good idea to invest in, etc. Ongoing content creation is super, super important. Now, you can't index for everything from an organic perspective, and I will tell you it is incredibly competitive. So you almost certainly are going to need to do paid search advertising in order to have enough visibility to get leads. And if you spend money on nothing else from a digital marketing perspective for franchising, spend your money on paid search. Again, these are the best leads. People have already made their decision. They're doing searches like best franchise to own or buy a restaurant franchise or own a pet franchise. These are incredibly qualified leads. Your volume might not be super high, but certainly the quality of those leads should be quite good. What I personally like about paid search is it's very measurable, very configurable, and by paying for the ad, you're actually right at the top of the search results, which is particularly great on mobile just because the screen is so small. In terms of some best practices from an advertising perspective, you want to bid on a variety of terms. So don't just pick 5 terms you think are really good and bid on those and hope for the best. When we create a search campaign, we literally include dozens of different terms. We're not necessarily trying to find one home run term that we think is the best. We're actually trying to find a bunch of terms that perform relatively well. So you're not putting all your eggs in one basket, so to speak. And you want to make sure you're bidding on your own term, on your own brand, I should say. I know a lot of people have a love-hate with that strategy, but if you're not bidding on your own brand, your competitors probably are. And you certainly don't want to be outranked for your own brand. And it costs only pennies because it's your brand. So really recommend you're bidding on that so your competitors don't outrank you. You want to bid on industry-specific, franchise, business, and yes, competitor terms. And keywords and headlines that include things like franchise opportunity or business opportunity, really strong performers, as well as financial-related terms like profitable franchise or good franchise to invest in. So these are some of the higher performing type terms and ads that you should be looking at. Once you feel you've got your SEO figured out and your paid search figured out, you can start to move more into the middle of the funnel with social media. It can be really effective at creating awareness, and in fact, some platforms are quite good at even generating leads. Which social platform you use largely depends on your franchise concept. I get asked this all the time, which is the best social platform for franchise development? The answer is it depends on your franchise system. So we've had great success with Meta, which is of course Facebook and Instagram, on a wide variety of brands. It's got a lot of people on the social platform. It's got great ad opportunities. So we do find Meta tends to work well. But we've also had good success with some specific concepts on TikTok, as an example. TikTok's not for every franchise company, but if your franchisees tend to skew a bit younger, if you have a lot of video that you produce, TikTok's an interesting opportunity. Same goes for Pinterest, very visual medium. We have had good success. If you're looking for particularly female entrepreneurs, that's a good one. Reddit can be very strong for some franchise concepts. Tends to be a little less competition, a little lower cost, which is very positive. And LinkedIn's a tough one. So everyone thinks LinkedIn should be an opportunity for franchise development. And it is. And we've certainly had some clients where LinkedIn performs incredibly well. We've also had some where it just doesn't. So LinkedIn is one of those ones where very much depends on your franchise concept. I also want to talk about lead ads. So Meta, LinkedIn, and TikTok have a lead ad, is what they call it. If you watch the video that's rolling to the right side of the screen, there you can see an example. This is basically where the ad itself has a form right in it. So rather than clicking an ad, going off to a landing page and completing a form there, someone clicks the ad and the form is built right in. So the reason this is great is because it's really low friction. They don't leave Meta or TikTok or LinkedIn. So you don't have that friction and a drop off from just leaving the environment. Also, the form is very user friendly because it's right in the ad. Oftentimes, you can pre-fill specific fields. Makes it super, super easy. So if you use a lead ad in this fashion, your volume of leads will in fact go up. I absolutely guarantee it. The downside, though, is it's almost too easy because the friction is so low. People will just click, 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 and they're done. And so you'll contact them, and they will literally say, "What are you talking about? I don't remember filling in a form." And they're telling you the truth. It's just, it was so easy, and people are so conditioned to just click the button, they don't actually realize what they've done. So you get a lot of false positives, and you're chasing your tail a little bit with some of the leads is the downside. So what we tend to do when we're using lead ads is we'll purposely add a couple of fields to the form just to make them turn their brain on and think about what it is that they're putting in. That lowers the propensity for someone to just click, click, click through and increases the quality of those leads. In terms of social advertising best practices, we do find that photos of franchisees inside or in front of their business perform really well. This little cartoon illustration here, obviously you never use a cartoon for your ads, but as an example, a couple of franchisees with their arms crossed standing in front of their store, that performs super well. That is just, it's a high performing ad, just a good piece of creative. People can see themselves as a business owner. You want to incorporate action terms into the copy. Enjoy a proven business, start your own, franchise with. And one thing I would say is try to avoid photos and videos that look almost too polished. You want it to feel real and feel legitimate. So don't overdo it in terms of the polish or the photo editing that you do. There's also an opportunity to stand out with video. So video is the most engaging medium on the internet. It allows you to tell a story about your franchise, and all the platforms support video. You can run video ads on Meta, LinkedIn, TikTok, YouTube, etc. The other thing that's interesting is you can use video on your website itself. So not just in your ad, but on your website, you can include video testimonials of your franchisees talking about your franchise concept, store walkthroughs showing how beautiful your stores are. Maybe it's the CEO talking about why they started the franchise and why it's a great franchise concept. It's just a good opportunity to engage people more and tell them a story in a more visual fashion. Short form video is an interesting opportunity as well. So things like Instagram Reels, YouTube Shorts, and TikTok have absolutely exploded. They do tend to skew a bit younger. So if you do tend to attract younger franchisees, think about this as an opportunity. And you could convert normal videos or even traditional photos into short form videos quite easily. We've seen some good results with very specific types of brands. Display is getting right near the top of the purchase funnel now. So it's a good augmentation to other pieces of your strategy. So display advertising is really effective at getting low cost reach, which helps you create a brand impression. I wouldn't suggest running display advertising on its own. If you do kind of get any traction and you're creating any kind of interest in your sector, as someone moves through that purchase funnel, if you're not present in the middle and bottom of the purchase funnel, there's a good chance all you've done is increase leads for your competitors. So if you're going to do display, really has to be in conjunction with some other mechanism to help bring that lead into your ecosystem. It really can be quite effective, though, if you have a defined geography that you're trying to find a franchisee. Let's say it's a specific state or a city where you want to get a franchisee. Maybe you have an existing location. Obviously, you should be doing social and search, as I've already talked about, but then layering on display in that specific geography creates a real domination effect where you can really oversaturate a small market for very little dollars. So in terms of some best practices, as I was mentioning, displays a top of funnel. Don't expect it to drive a lot of clicks and traffic all on its own. You will get some clicks, but the odds of them converting is quite low because they're so early in their decision-making process. So what you really want to do is keep the messaging simple. Don't cram too much copy into that ad. Don't make them work too hard at it. You're simply trying to create a brand impression. Maybe you get the click, maybe you don't. But the idea is that you're planting that seed at the top of the funnel, so as they move through that purchase funnel, you're capturing them through social media or through search as they go. And one opportunity that's kind of fun is audio. So Spotify is a great example of digital audio where you can reach a unique audience. So Spotify allows you to target by interest, age, gender, location, a bunch of other factors. Podcasts are a good opportunity as well. So this again is an opportunity right at the top of the funnel, reach very specific audiences with an audio message, very engaging way to reach them. Again, don't do this on its own. It should be in conjunction with other strategies. And the last thing before I wrap up is your built-in influencers. So we love to talk about this with franchise organizations. You have influencers built right into your company. They're your franchisees. Mobilizing your franchisees to help you get out the word and act as ambassadors for your brand is so powerful. You can create text and video testimonials that you can put on your website, put in your campaigns. Your franchisees can post on their own personal social networks about why they became a franchisee, why your franchise concept is so good. Just so many opportunities to get a real legitimate word out about why your franchise system is the right one. Okay, so to wrap it up, the industry fundamentals for 2025 look very encouraging. Again, all things being equal, as long as there aren't any big economic shocks that we don't see coming. Competition for candidates, though, is very high, so you need to make sure you have a strong marketing plan so you can attract the right franchisees for your system. And whatever you do, don't try and do everything I've said today. That's way too much. What you need to do is pick platforms that work for your franchise system, for your target franchisees, and figure out messaging and imagery that works for you and, again, resonates with that target franchisee you're looking for. Really appreciate you taking the time on this video today. I would be more than happy to talk with anyone if you have any questions. Also, if you scan the QR code you see on the screen there, you can download a free version of our 2025 Digital Trends Report. Thank you again, and have a great day.